If you have $100,000 sitting in your savings account, you are losing money by the second. This is because money in your savings account doesn't grow in value like it should, especially when you factor in inflation. Inflation is the rate at which prices for goods and services rise, and when it outpaces the interest you earn in your savings, the purchasing power of your money diminishes over time. For example, if your savings account earns only 0.5% of interest annually, but inflation is around 3% and in more recent years 8%, you're losing a ton of money. Think about it. Every year, the things you want to buy, like food, gas, or even a new phone, cost a bit more than they did the year before. So while your savings account may be safe and secure, it's not really working for you. Instead, it's just sitting there, stagnant, while the cost of living continues to climb. But what if you took that $100,000 and invested it in the best 6 index funds instead? Imagine the potential growth and how it could transform your financial future. By investing wisely, you can outpace inflation and ensure that your savings grow. And in this video, we'll explore those top 6 index funds, look at their historical performance, and see what would happen if you invested $100,000 in these 6 index funds. And don't worry if you don't have $100,000 to invest right now. You can kick off your investment journey with just $1,000, $10,000, or even $100. The important thing is to start investing as soon as possible. All of these strategies we'll cover today work for any investment amounts. Ready to get started? Let's go. Also remember, all investments come with risks, and there's no guarantee you'll make any money, so be sure to do your own research before making any decisions. Let's kick things off with one of the best options available. Number 1. The Vanguard Total Stock Market Index Fund Admiral Shares, often known by its ticker, VTSAX. This fund offers broad exposure to the entire United States stock market, including large, mid, and small cap stocks, which means you get a little piece of everything. The fund's top 3 holdings are giants in the tech industry, including Apple, Microsoft, and Amazon, making up about 15% of the entire fund. With a dividend yield of 1.34%, it also provides a decent income stream for investors. Over the last 10 years, the fund has seen a compound annual growth rate for dividends of 1.73%. When we break down the sector composition, we find that technology leads the pack at 27%, followed by healthcare at 14% and consumer discretionary at 11%. This diverse allocation helps to balance the fund and reduces risk. Now, let's look at what that average return could mean for your money. If you were to invest $100,000 today, at an average return of 10.47%, your investment could grow significantly over time. In 10 years, you'd be looking at roughly $271,000. In 20 years, that could rise to around $784,000. And if you left your money untouched for 30 years, it could potentially grow to more than $2.28 million. If you were to invest $100,000 in this fund today, you could potentially see your investment grow to $110,470 in just 1 year. Fast forward 10 years, and that amount could increase to around $283,618. If you hold it for 20 years, you might be looking at approximately $804,392. And after 30 years, your initial investment could swell to a whopping $2,281,000. Now, when you factor in dividends over those 30 years, you could add an additional $750,000. That brings your total investment value to approximately $3,034,000. And real quick, before we move to number 2, if you want more investing and finance videos, make sure to subscribe and hit the notification bell so you never miss a video from us. Now let's dive into number 2, the Schwab SP 500 Index Fund, which is ticker SWPPX. This fund focuses on large United States companies and tracks the well-known SP 500 index. This fund includes top players like Apple, Microsoft, and Amazon, making up about 15% of its total. Over the past decade, it's averaged an annual return of 12.86%, including dividends. Let's break down the numbers a bit more. If you were to invest $100,000 in the Schwab SP 500 Index Fund today, your investment could potentially grow to around $113,645 in just 1 year. Fast forward 10 years, and that amount could increase to about $359,361. If you hold it for 20 years, the value could rise to approximately $1,291,405. And after 30 years, your initial investment could soar to around $4,640,000. This impressive growth plus dividends that could add another $1,650,000. With a dividend yield of 1.52% and a 10-year compound annual growth rate for dividends of 1.88%, the total potential return over 30 years could be as high as $6 million plus. Let's move on to our third pick, the iShares Russell 2000 ETF, known by its ticker, IWM. This fund focuses on small-cap United States companies and tracks the performance of the Russell 2000 index. It gives you exposure to a diverse range of smaller companies, which can offer significant growth potential. The fund's top 3 holdings include AMC Entertainment, Plug Power, and DigitalOcean Holdings, making up about 10% of the total fund. With a dividend yield of 1.14%, it provides investors with a modest income stream. Over the past 10 years, this fund has achieved a compound annual growth rate for dividends of 1.60%. When we take a closer look at the performance, the average return over the last decade stands at 10.50%. If you were to invest $100,000 today, you could see your investment potentially grow to about $111,020 in just 1 year. Looking ahead, after 10 years, your investment could increase to around $284,462. If you hold it for 20 years, that amount could rise to approximately $809,191. And if you keep your investment for 30 years, it might reach as high as $2,301,850. Now, when you factor in dividends, you could add an additional $450,000 over those 30 years. This means your total investment value could potentially be around $2,700,000. Number 4. SPDR/SP 500 ETF Trust, commonly known by its ticker, SPY. This fund focuses on large-cap United States companies, effectively tracking the SP 500 index. The top 3 holdings in this fund are giants in the tech industry, including Apple, Microsoft, and Amazon, which together make up about 15% of the entire fund. SPY offers a dividend yield of 1.52%, providing investors with a steady income stream alongside potential growth. Over the past decade, the fund has seen a compound annual growth rate for dividends of 1.88%. The sector composition shows a strong emphasis on technology at 28%, followed by healthcare at 14% and consumer discretionary at 11%. This diversification helps mitigate risk while maximizing potential returns. Now, let's explore what that average return could mean for your investment. If you were to invest $100,000 today, you could expect an average return of 12.86% over the next 10 years. In 1 year, your investment could grow to approximately $113,645. Looking ahead in 10 years, you might see that grow to around $359,361. If you hold it for 20 years, your investment could potentially reach about $1,291,405. And if you leave it for 30 years, your initial investment might swell to around $4,640,810. When factoring in dividends, you could also expect to receive around $1,650,000 over those 30 years. This brings your total investment value to approximately $6,290,810. In the 30th year alone, you could expect to receive annual dividends of about $55,000, translating to roughly $4,583 per month. Number 5. Vanguard FTSE Developed Markets ETF, better known by its ticker, VA. This fund focuses on international stocks from developed markets, excluding the US, and Canada, giving investors exposure to a diverse range of economies and industries around the globe. The top 3 holdings in this fund are Nestlé, Novartis, and Roche, which together comprise approximately 10% of the total portfolio. One of the standout features of VA is its dividend yield of 3.54%, which is significantly higher than many domestic funds. Over the last 10 years, the fund has demonstrated a compound annual growth rate for dividends of 4.12%, reflecting consistent income growth for investors. In terms of historical performance, the sector has seen varied returns. In 2023, the fund achieved a return of 17.94%. When looking at the average annual returns over the last decade, the fund has achieved an 8.45% return when accounting for reinvested dividends. Now, let's consider the potential future returns. If you were to invest $100,000 today, with an average return of 8.45%, your investment could grow significantly over time. In 1 year, you could expect to see it grow to about $108,785. Fast forward 10 years, and that could increase to approximately $232,109. If you hold your investment for 20 years, it might rise to around $538,747. And after 30 years, your initial investment could swell to an impressive $1,250,484. When you factor in dividends, you could receive around $540,000 over those 30 years. This would bring your total investment value to approximately $1,790,484. Number 6. Invesco QQQ Trust, known by its ticker QQQ. This fund primarily focuses on large-cap tech companies and aims to track the NASDAQ 100 index, which is home to some of the biggest names in technology. The top 3 holdings in this fund, Apple, Microsoft, and Amazon, constitute about 40% of its total assets, making it heavily weighted towards the tech sector. In terms of income generation, QQQ offers a dividend yield of 0.54%. While this yield may seem modest, it reflects the focus on capital appreciation over income. The fund's 10-year average return is striking, standing at 20.00% when dividends are reinvested, showcasing its potential for substantial growth. Now, this is not always the case, and 20% gains year over year are amazing. Now, let's break down what potential returns might look like for an investor. If you were to invest $100,000 today, you could expect your investment to grow to approximately $120,000 in just 1 year. Fast forward 10 years, and that amount could escalate to around $726,825. If you hold on for 20 years, your investment might grow to about $5,282,753. And after 30 years, it could potentially soar to an insane $38,396,396,396,396. Of course, these figures represent amazing potential returns based on historical performance and assumptions about future growth rates. Actual returns can vary significantly based on market conditions and investment strategies. The power of investing lies in its ability to harness the growth potential of the stock market over time. By consistently investing in index funds, you can benefit from the compounding effect, which allows your wealth to grow exponentially. With patience and a long-term perspective, even modest investments can lead to substantial financial gains. Remember, the earlier you start investing, the more time your money has to work for you. As you navigate your investment journey, stay focused on your financial goals and allow the market's historical trends to guide you toward building a prosperous future. Now, if you want more investing, money, and finance videos, make sure to subscribe to the channel and hit the notification bell so you never miss a new video from us. Also, make sure to like this video. See you in the next one.